All right, guys, what's going on? Welcome to the stream. This is going to be my first session live with you guys. It's about 9 p.m. Eastern here. Just send me a one in the chat if you can hear me. All right, perfect. I only got Rodrigo. There might be a delay on my end, so I guess I'm gonna, this is gonna be really like a casual space. So we're gonna kind of go over just the dollar index, what I was looking at on the weekly. If you've been following this market, it's pretty, the dollar index is just pretty much bearish, and I've been bearish since the monthly close. So if we hop over to the monthly, right, we had a really strong rejection from this volume imbalance. So on a monthly basis, until this volume imbalance is breached, again, I'm having troubles with these drawing tools, right? So until this monthly volume balance is violated, right, I'm staying bearish. So we can throw in a little X icon here. Oh, I added all these emojis. Look at that. So, as a trader, I always have some type of invalidation when I'm creating a bias and when I'm trading. My high time frame invalidation allows me to stay on one side of the marketplace, right? So until we breach this volume imbalance, right now we're below this bearish order block on a monthly basis. So we have this consequent encroachment, and we also have the open of this bullish order block. Right, so these levels are going to be sensitive going forward. So our targets can possibly be reaching into this buy side imbalance lower. All right, so if we're going to project possibly a swing, we can make this, we can make it blue if we want. All right, so on a monthly basis, right, and I was talking about this actually at the end of last year, right? If we're expecting, the market to manipulate at some point, right, I'm seeing this huge consolidation as possibly an AMD pattern, right? So we have this massive accumulation, right? The huge manipulation, and now we've purged the range high, and now we're kind of breaking back into the range, right? So we have this consolidation that's built up over time, and right now the order flow is obviously bearish, right? So we're going to project where we might trade to, right? We're about, we're below equilibrium, and I think it's going to push lower, in my opinion, right? So we've just tested equilibrium, so there are deeper discount levels that we can trade to down in here. So what would we possibly aim for, right? I wanted to see this, the low and the open be about the same price, but they're close enough. So, right, so the low and the open here is about 3 pips. So there's not really a wick down here. So I think we're going to possibly trade down in the 98s. All right, so let's hop into the weekly. Let's hide some of the monthly drawings that I just put up just to clean it up. All right, so on a weekly basis, we've had this liquidity purge. All right, this was our monthly volume imbalance up here, right? There's possibly SMT on here. I haven't been following every market, but between the euro and the pound, you probably would have seen some type of, some form of SMT as a long-term, position trader. That's possibly a setup that you could have taken advantage of. All right, so now we're below this weekly fair value gap, and we've broken below this weekly low. All right, so each week since we've broken, right, or since we've reverted from this liquidity purge, every single week has created lower lows and lower highs, right? None of these previous weekly highs have been rated yet. So, I mean, there's definitely a possibility that it could bounce, but right now the market is extremely weak. So all these discount levels, right? This was a discount level. When it's violated, right now it becomes a premium that bears will sell into. Right, so the market flips and inverts and pushes lower. So, right, that was the monthly buy side imbalance there. So now we're trading inside of this daily volume imbalance. So the next downside targets, right, as long as we don't start trading higher, I mean, tomorrow's Friday, right? Just keep this in mind. On a weekly profile, right, if we're trading bearishly mostly for the whole week, right, the odds of it continually trading lower tomorrow is, the odds are very low. So we possibly might see a TGIF setup. Maybe during London, they'll purge the low and we'll get some sort of a bounce right back towards last week's low, which is kind of what I'm expecting. Since we've had such a large expansion and we've had so many consecutive bearish weeks, right, we could expect some sort of consolidation or a bounce, right? So we have a low resistance liquidity run build up from the previous weeks. But as long as we stay below this weekly volume, inverted fair value gap, I'm still seeking lower prices, right? So on a daily time frame, we have this buy side imbalance that was completely invalidated, right? Like we've traded down into it. There was somewhat of a bounce. I honestly wanted to see this rip higher because this was the 2022 mentorship model, right? We had a breaker in here. This is a breaker, right? This purge on the high could have been a breaking market structure. And then you would have seen a return to the fair value gap, right? But if the market was bullish, it should have just completely ripped and not, right? So when this candle rejected, right, the following day provided bullishness, but it did not stay above this sell side imbalance, right? Like, so as soon as it breaks down, now the market is just continually showing you weakness, right? We have a volume imbalance that was created here. And then this wick, right, the consequent encroachment of this wick, it didn't exactly tap it, right? But as we know, on other pairs, the spread would probably trigger a lot of orders. All right, so initially, too, earlier this week, I wanted to see if this volume imbalance was going to hold, right? So yesterday, we did not get that. All right, so this completely invalidates any bullishness that you would have on the dollar, right? So when this happens, now we have to start seeking sell side liquidity, right? And we have this volume imbalance in here. This volume imbalance was actually created today. All right, so going forward, we can plot this out in time, right? This may be a sensitive price in the future. So until we get back above this volume imbalance, we're going to continually seek lower prices, right? But where can it possibly trade up to? Like this bearish swing, right? It could possibly trade back up into here, rebalance some of this, right? This huge sell side imbalance could possibly be rebalanced before we're allowed to trade lower, right? So then our projection would bring us down to about 99.8067. All right, so it's pretty straightforward for me on the dollar, right? So all these consecutive candles become one bearish order block, and now we have a impulse leg. So do we get consolidation or do we get a retracement? That's kind of what I'm waiting for. So let's hop over into the dollar yen. If you guys have questions, just shoot them off in the chat. I'll take a look at them a bit later, and we'll discuss them. Just let me know. Hopefully, this the quality on YouTube's all right. So the dollar yen, I don't really trade this pair a whole lot, right? But when I'm doing my analysis, I have a couple different markets. I'm mostly following the majors, like anything correlated with the dollar. I'm going to start reviewing some crypto markets, just because, like, if we start if we start heading towards, CBDC, possibly the crypto markets could have a lot of, a lot of money flowing towards it, and volatility might pick up. So on the dollar yen, this is a weekly chart, right? So what do we have in here? We have this very small fair value gap. Like, you can see how it's retested a couple times. And then we have this rejection block, right? So 50% of that would provide some measure of, resistance. So when this started rolling over, now I'm starting to find premium levels that I'm trying to get short at. So I had sent out a tweet earlier today, right? If you guys were following, this is kind of like how I trade, right? This is how I trade. Like, I'm trying to sell short inside of this imbalance, right? So as long as we don't get any type of closure above it, I'm just going to remain bearish, right? And we're just going to start targeting these lows down here. So this is a low resistance liquidity run. All this liquidity build up right here is a trend line, right? That's the trend line phantom. So what this is doing is, it has an impulse leg lower, right? And now it's just balancing out the sell side with buy side, and allowing, those that inefficiency to be filled, so they can pair the orders and get short on the market, right? So as long as we're at equilibrium too, so this does have room to the downside. But this morning, this weekly candle was trading up here, right? So let's dive into the daily. All right, so if I just if I just take the replay, right? So this is what I was looking at yesterday, right? I'm viewing this as external range liquidity, right? Because we have this low to this high. So when we purged that high, and yesterday provided a bearish candle, right? I'm looking to sell short with the expectation behind the dollar going lower that this pair is going to also trade lower. All right, so let me skip ahead to live. So when I came to the market in the morning, right, I came to the market around 6 a.m., 7 a.m., right, we had this 4-hour fair value gap. So I had a really tight stop. This swing high right here, which was, about London close yesterday. Let's make sure this. All right, so let's zoom in here. This swing high was my stop loss. So prior to the news, right? A lot of people ask me, how do I trade high impact news, right? So there's certain events that you should avoid, right? CPI, FOMC, and NFP. And honestly, CPI could have been traded like in a deflationary market when the Fed's not completely raising rates. Like lately, the last 2 years, CPI has been a hot topic. So that type of news environment, a lot of smart money is not positioned prior to that, right? Like during CPI, it's going to run stops on both sides of the market, and you definitely don't want to have risk on at that point. So when I came to the market, right, this is my invalidation level, right? The low of this candle becomes my invalidation. But since I'm trading intraday, right, I'm trying to tighten my stop and have a greater risk to reward. Right, so if we flip into the 1 hour, right, I was expecting that this bullish order block in here, right, wasn't going to get violated. So when I saw this 1 hour candle, that's kind of where I shorted it. All right, so I shorted it on the next candle actually. And this is the London high. Right, so this narrative, right, I could have easily been stopped out here. But typically, when I'm intraday trading, I'm typically trying to use the previous day's liquidity. A lot of times I'm not using like the London session liquidity, because a lot of times you're going to get runs on the London session lows and highs during that specific day, and then it's going to expand. So just like this, right? Like I had a tight stop loss, but I really did not want to see it come back up into like 50% of this 4 hour fair value gap. All right, so I just had gone short. I don't believe this 15-minute order block, right? Like when this rolled over, that's where I shorted it, right? And my stop was up here. So, I pre-positioned at 7 a.m. Okay. It was possibly too early, right? This is something that you might need to journal and study and backtest on your own, right? This 8 a.m. liquidity purge was what almost tapped me out of the market, right? But on really high probability trading setups, oftentimes, it'll just break down from here. Like it won't run that liquidity. But because, this London high is in place, after the fact, in hindsight, you can see that they ran the London high out and then sent it lower. I want to see if I can bring up the Asian range and the flout and CBDR. Yeah, so since the Asian range had already been run out, I really did not want to see it trade higher, even though it did, right? So this was still a high quality setup for me. I was using the midnight open and expecting that, right? Like on really great days, you're not going to get that much of a protraction above the midnight open. But this really comes with, remaining calm in your trade and understanding like what your model is and sticking to your plan, right? I got a question, let me just pull it up actually. Yeah, so Nate on Twitter had asked, could you go over how and when you're in a trade and price is going against you, what needs to happen in order for you to close early, if you do close early at all? Personally, too many times I'm in a trade, it moves against me, I get out, and then the price moves in my intended direction, right? And I deeply resonate with what Nate's saying because it happens to me all the time. Like, well, it did happen to me all the time when I was more focused on the outcome than the process, right? Like if you're focused on, you're worried about taking a loss, so you just want to cut it at 50% or 25%. It's really just your tolerance to risk is not robust enough for you to hold on to those trades, right? Even trading small, right? Trading a demo account, you should be trading at a size that allows you to make proper decisions, not based on your floating P&L, right? So your invalidation level should be a logical area where, if price goes to that level, you pay your stop. And, Michael talks about this all the time, right? You're paying your stop to do its job. Like I paid my stop to do its job. It literally almost stopped me out, almost 2 pips, maybe not even 2 pips, right? The spread maybe on some brokers would have taken me out. And honestly, that's you guys probably see me beefing with some people on Twitter about the prop firms, right? They're complaining about spreads and stuff. Like I literally traded this on prop firm accounts, right? And I didn't get stopped out, right? So that's 1.5 pips that price came within my stop. It's on my copier. Like I'm taking the same trade across all those accounts. I didn't have that issue. So maybe it's a user thing. I'm not 100% sure. I've been trading with these prop firms for a long time now. Some of them almost a year and a half. And I haven't really had any major issues. So if it's something that's maybe, broker related, like 8cap, like that has something to do with the broker, not so much the prop firm. And I know some of these firms are trying to move away from 8cap. So, we're kind of leading into like how to remain calm in a trade. Like I watched a really good series the other day on Disney Plus, and hopefully we're going to get into talking about it on the podcast that I'm doing with Trader Roundup. called Limitless, but with Chris Hemsworth, right? So the first episode actually was amazing because he challenged himself to do this crane walk. I think it was like, I can't remember how many stories up in the air it was, but it was, hundreds of feet in the air. And they talked about the fight or flight response, right? So we get that same feeling as traders. Like as soon as you put risk on, it's like your emotions are, it's either, survival mode basically. Like I need to protect my account or I need to make money. Um, like your response and how you react to that is really based on you and your back tested strategy. Like ICT mentions, if three PDA arrays fail, it's most likely going to go to your stop, right? So a lot of times I don't have three PD arrays prior to my stop loss getting hit. All right, so remaining calm comes with experience and understanding what is triggering that fight or flight response. Like you're not going to be an expert at it right away. But if you can try and learn how to manage it, there's this one psychologist. His name is Randy Howell. He's a little bit old school, and his videos are a little bit boring and monotonous. But if you if you go on his YouTube page and follow him, he talks about the fight or flight response and how it's like a caveman brain. That's a caveman brain tool in your, as humans, that's kind of what we did as, survivalists. Like fight or flight was basically, them, they had to survive really. So you get those same feelings when you're trading. Like as soon as you put risk on, it's like do or die now, right? And it really shouldn't be that way. If it's do or die, you're over leveraged and, one trade is going to just blow your account out, right? Like I get those same feelings too, right? I was in this trade today, right? It got so close to my stop loss, and I just wanted so badly to get out of the trade. But you pay your stop to do its job, right? When it's running that London high, I just stayed patient, right? I could have widened my stop. I could have done a million things. I could have scaled in. I could have done so many. There's so many mistakes that you could do as soon as those emotions start kicking in, right? But you have a plan in mind, right? Based on a higher time frame premise, based on all your analysis, and then you have to just stick to the plan and just remain calm and don't get too overzealous and move your stops. Like really take some time. Like if you think you're gonna make a decision irrationally, like maybe just get up for a second from your desk. Don't even look at the screens, right? If you're in a position, just make sure you have a stop in so you're not getting completely liquidated. And just come back and refreshed before you make any decisions, because a lot of times, right, if you're going to make a decision irrationally, I made those decisions so many times where I was like so uncomfortable with the risk, I just closed it out at a loss, right? And you're booking that loss. If you had just held on the trade, and I know a lot of traders are over trading, right? They're just in there constantly. I think FTMO actually took down their leaderboards. Like I used to love going on there and looking at traders' uh, accounts, right? Because you're looking at some of these accounts and they have wild P&L swings, and they're taking like literally hundreds of trades in a single week, right? So that to me is like you're not making rational decisions. You're just gambling and you're allowing the P&L to fluctuate and really affect your decision making. So remaining calm in a trade, that's something that comes with time, right? And you have to just what I practice meditation, right? Like just visualizing. And my friend Rodrigo, right? He's a psychologist, or he's a psychology coach, right? He used to walk me through guided guided trading days. Like close your eyes for a minute and just imagine what it's like to take a loss, right? If you're sitting in a trade, just imagine yourself getting stopped out, or imagine yourself putting on too much leverage and then getting stopped out, right? Like, because those days are going to happen. So if you're already envisioning it ahead of time, you can deal with those issues in a better manner, right? So I did not hold this trade to full target, right? Like it was approaching 9:15. I was actually golfing, so I just close the trade out, right? Like I scale parts, 70% of my trade out, and then I just close the rest, right? You don't have to get the whole move, right? ICT talks about it all the time. If you get out of the trade and it keeps going, are you going to be mad, right? You have to be content with what the market's giving you. And, I've only taken 3 trades in the last 2 weeks. So you have to just pick your spots wisely. Like, you don't just go into the market every single day unless you're like extremely experienced and you know exactly what you're doing, right? Because a lot of times, if you look back on that day, you've probably made 50 decisions and there were, 40 of them were incorrect, right? And that comes with how you're trading, right? A lot of times I'm just trading for value gaps. My trader main, he trades mostly breakers and order blocks, but you have to have some type of invalidation, right? You set your risk limits and you let your trades pan out. A lot of you will probably do a lot better if you're not sitting in front of the screen all day long, right? Like I could have just set this trade and gone golfing and not even paid any attention to it. I wouldn't have had, my heart palpitating while the trade's like, 1.5 pips from stopping me out, and I would have pretty much just had a 1 hour loss on the week. But that comes with confidence and it comes with understanding your draw and liquidity. All right. So I guess we'll go over some questions. Or you know what? Let me bring on my buddy Rodrigo.
Hey, what's up, Kyle?
Rod, can you hear me, man? I'm not sure if
Yeah,
he's oh, here
can
we
you hear
go.
me?
Perfect. Yeah, what's up, man? Glad to
All
have
good, all good. Just enjoying your stream, bro, and the trade that you took. Very like that's high precision right there. But also the topics that you're covering, really, really relevant to traders today. So I'm quite excited to get into those.
Yeah, I mean, so if you guys haven't seen, Rod and I are going to be hosting a podcast this weekend. We're going to be covering a book called Overthinking. And I think this topic, right, leads so much. And, that topic is really encompassed in what I'm talking about right now. Like overthinking your trade is so
Mm.
detrimental to your performance, right? When, and that comes with preparation. Like I treat trading like it's a performance sport. Like when you're looking at like a Tiger Woods or a Kobe Bryant, right? Like Kobe said, like I'm not afraid of taking that game-winning shot because I've done it 10,000 times at practice, right? So when he's in the moment, he's not thinking about anything. His body is just doing it, right? And that's very similar to trading. Like when you're in flow, you're just trading and you're not even really thinking. Like your best days, you don't even have to think about making poor. You don't even have to think about making poor decisions because you know when you're going to move your stop loss, you know when you're going to take your partial, you know you're going to manage risk, and you know when you're wrong, right?
Yeah, exactly. You want to clearly define your edge in every aspect, but it's not just your technical edge. And this is where a lot of traders they get lost in what models they should be trading, what days of the week they should be trading, what instruments they should be trading, and they completely forget the most important part, and that's the weapon between their ears. Yeah, this is the most advanced, most complex piece of machinery in existence. That's your human brain. Now, most traders don't utilize it. In fact, they become a victim of it. And so, in order for you to be a very high precision trader, making the right decisions at the right time, executing those signals when they're there, and knowing when to step away, you need to know how to use this. Okay. So, it's when it comes down to knowing how to use your mind, you need to condition the mind. Because if you haven't conditioned your mind to be a trader, to think like a trader, then why do you think that you're struggling? Why is it that it's so painful? Right? Because you haven't conditioned the mind. Even what Carl's talking about in terms of this particular trade, he still experienced that emotional roller coaster when he was managing the trade. because it's, we're human. We're still going to feel the emotions, but it's understanding that the emotion as a signal is not, when you get to a certain level, that you need to stick to the plan. So Kyle knows what his edge is. It's clearly defined. And so before, I remember Kyle, when we used to work together, you used to close these type of trades out. You never let it hit the stop. And I
Oh yeah.
remember I remember saying to you, man, just let it hit the stop. It's either TP or it's your stop loss.
I think a good like practice is to just punt a trade, right? Just punt. Go until, even if you just do it in a demo account, right? Just start punting trades and just visualize and just watch your trade hit the stop loss, right? Because that is like that it's an edge in itself. Just keeping your stop loss at the invalidation level you set originally. Don't move the stop loss. If it's gonna go to your invalidation level, you're wrong on the trade.
Yeah, no, that's definitely a good idea.
I mean,
And
some
it's something it was
yeah,
something that I heard Kit ICT Concepts talking about with some other quite experienced traders, and that's knowing when it's game time, knowing when it's practice. And it's important to have a demo account on the side, something where you can just scratch that itch, something where you can practice and changing your variables, something to trade those lower probability trades, something to test. And so having that, for me personally, what I've done in the past is, if I don't see a trade, but I've prepared myself, I've done my evening routine, I've gone to bed on time, I wake up at 5, I'm in the gym for 90 minutes, then I'm in the sauna, I'm meditating in the sauna, I'm visualizing, I'm practicing gratitude, I'm going through my routine, I get home, I'm going through my writing out my journal, doing my pre-trade checklist, going through all of that. I get to, once I'm ready to go, there's no signal, and I'm ready to go, man. I'm just so I'm ready to pull the trigger. So what I do is I just jump on a simulation, forex simulator. I choose a fractal, perhaps maybe in the last 3 months, and I just go through it. I go through the motions, but it's simulated. And this is and so I'm giving my mind the ability to scratch that itch. And this is something that I want to give you guys. It's very important to understand that your mind is a weapon and you need to use it. You need to be able to have that sniper mindset. And the sniper, he knows when to take his shots. The sniper knows when to not take the shot, because the sniper is not like the machine gunner. Okay, everyone on the battlefield knows where the machine gunner is. He's just spraying, right? Spraying, and every now and again he hits the targets. But a sniper is precise, and the sniper is most of the time in within enemy territory. They need to take a shot, and they need to get out. Right, their goal that day is survival. It's not just to take the shot and take the kill. They need to be able to survive. That's the type of mindset you need to have as a trader, the sniper mindset. You need to be able to take your shots when they're available. When the signal is there, you take the trade. When there is no trade, you get out the battlefield, right? You get out, you come back tomorrow, knowing when to walk away. I mean, Kyle, how difficult is it? How difficult
it's
was it for
extremely
you
difficult,
to
especially if
be
you're
able just not trade and walk away?
just the ability to access markets from your phone, right? Like,
Mm.
it's so easy to just go back in and take another trade, right? Like, there's nothing stopping you. Like, and when Rodrigo and I were working 1-to-1, I was still making those same mistakes. So even though you have somebody guiding you and me telling you, right, and Rodrigo telling you to just walk away from the markets, nobody's gonna do it except for you, right? Like, you have to just man up and just say, I'm wrong on the day. And that's the biggest thing, is just accepting that you're wrong on the day and that your analysis was wrong. Right? And like what Rodrigo brought up about taking trades in a simulated environment, right? It's very similar to. I always bring it back to sports, right? Like when Kobe Bryant or Michael Jordan had a losing game and they missed the last shot, they were staying after the game to shoot those shots, right? It's not a game time situation, but they stayed late to practice their free throws, right? It's the same thing with trading. If you're poor at one thing, you have to identify what it is first. Like a lot of people are just on autopilot, and for so many years I was on autopilot too, just clicking the button. It's so easy to just go in there and click a button. A lot of times you might even hit sell when you meant to hit buy. Like it just your brain just overrides it, and uh, the fact that you can make money just by clicking a button, right, makes it the barrier to entry so easy, but also it makes it so easy to make mistakes, right?
Yeah, yeah, definitely. It's and the thing is, you're gonna make mistakes. You're gonna make mistakes, and the thing is, we don't like to make mistakes. Nobody likes to be told they're wrong. Nobody likes to lose money, and that's the thing. In most professions, when you make a mistake, it's almost like it's forgiven, right? You can get away with it. You don't go to work to a 9 to 5, make a mistake, and then suddenly your boss says, "All right, I'm taking $100 off your salary this month because of that
That's the
mistake."
thing is like you can see it. When I was in business, right? Like the owners get angry, right? Because this is their money, right? You as the employee are going to get paid regardless. So you have to have that business owner mindset, right? This is your capital. These are your prop firm accounts that you have to protect. Like you are the boss, right? So if you're paying somebody and they're not doing their job, then you're going to get angry, right? So understanding that and like putting yourself in the shoes of a business owner and taking it seriously, right? You're going to get angry. Trading is like that. If you take a loss, you're going to lose money. It's not like any other typical business, right? Like everybody's programmed to just think like I can just come into work and I'm gonna get paid. Trading is not like that. Like if you come into the markets and think you're gonna get paid every day and take a loss, like you want to go back in and end the day in the green, right? Like as a business owner, you're gonna have bad quarters, you might have bad months, you might have bad days, right? Like when I was in high end residential construction, right? Some parts of our project we were taking losses in, like I was still getting paid, but the owners and the clients were not happy about it, right? So when the pandemic happened, and this was something that I learned too when I was in my career, right? Like I understood a market. Like I got to understand a lumber market, right? So when that market price was going up, like the client is taking losses. To me, it didn't matter. I was going to get my paycheck at the end of the day regardless, right? But the clients are getting mad because the budget's getting blown up. And, you have to put yourself in that perspective. Like, trading is not a casino, it's not a game, right? Every decision that you make has a financial impact on your bottom line, right? So if you feel like you're out of flow, just go into a simulated environment. Rod said he goes into a demo and just punts it. Like if you want to over leverage, just go into your demo and punt it. But you have to recognize like when you're about to make the mistake. That's the biggest thing. Like you can't you know you can't just have this brain fog and just go on autopilot and just start punting trades, because sooner or later, like you're gonna have one day where you just completely blow up, right? Like being disciplined and understanding like this is a game time situation. I'm preparing for the game, right? The game is only gonna last. Like if you're an intraday trader, the game is only gonna last, 3 hours. If you're a swing trader, set a time in your day where you're just going to analyze charts during that period. Because if you're a swing trader, right, if you're trading the 4 hour or the 12-hour chart and you place that trade on the 4 hour, right, don't start going down in the lower time frames to try to manage it, right? I watched a really good ICT video the other day. It wasn't the other day, it was a couple weeks ago, right? If you're using 3 time frames, you're using the middle or the higher time frame to manage your trade. You are not using the lower time frame. So the lowest time frame is only for entry. So if I'm using, for me, for example, right, like I'm using just for this example, it was the weekly, the daily, the 1 hour, right? If I'm taking the trade on the 1 hour, I'm not flipping down to the 1 minute to try and manage it, right? Because the candle closure is completely different than what you're seeing minute to minute. So if you're a swing trader, don't place a 4 hour trade and start managing it on the 5 minute, because you are gonna just, it's death by a thousand cuts. Right. So I think getting back onto the topic, like we probably got away from the topic a little bit because we were talking about overthinking, right? Like what is some practical advice to remain calm during a trade? Like for me, it's just trying to monitor my heart rate. Like I have a Whoop bracelet that I use to track my heart rate, and you can actually track high stress work blocks, so you can actually track your heart rate throughout that whole session. If I need to track the New York session, I can open up a session on my Whoop app, and I can track my heart rate throughout the whole session. So like, what would you recommend to somebody that's struggling with remaining calm in a trade? Because as soon as you put risk on, it's like you're sweating bullets.
Right. So one thing that I personally use on a daily basis, and something that I teach, is the Pomodoro method. So because what happened, the Pomodoro method is you split your work into work blocks. So it's time boxing essentially. So you time box 25 to 30 minutes work blocks, and you have a 5-minute break. Now, there's a lot of research and studies behind this method, and the data was this research was conducted by the top Ivy League universities in the US, and what they found was that the students that used the Pomodoro technique, they were both control groups were given 6 hours to revise before having to do an exam. And they had to revise a certain topic and memorize as much of it as possible. So this was basically a memory recall exercise. Okay. And so the group that was using Pomodoro during those 6 hours, where they had 25-minute break, 25-minute work block, 5-minute break, they completely outperformed on that test the group that just studied 6 hours straight without breaks. So even though they read through the same amount of information, what happens is that the brain, it retains in your short-term memory and stores eventually in your long-term memory the first 20 to 30 minutes worth of information that you're consuming. So the rest of those 5 hours and a half was a complete waste of time. Then you're not going to remember any of that. So think about all the times when you've been studying ICT content, when you've been back testing, and you just been glued onto that screen and you haven't taken any breaks. Sometimes you forget to drink. Sometimes you forget to eat, and you start getting a headache. You start getting dehydrated, and then you come back the next day and it's just not clicking. It's not clicking. So the Pomodoro technique is a method that allows you to retain more information, where you are able to store what you are consuming right now in the long term. So it becomes long-term memory. Now you want to, during your back testing sessions and during your live trading, I know it sounds difficult, but it's important to look away from your screens every 25 minutes. There's an app that I use called Focus Keeper that helps me manage that. So Focus Keeper looks something like that. Okay. It should be available in the App Store and on Apple. And during those 5 minutes, it allows you to reset. It allows you an opportunity just to close your eyes, take some deep breaths, drive that oxygen back into your brain. I have my office is set up outside my main house. It's in the garden. So I go outside, I do some burpee press ups, I do some squats. Or if it's time for me to pray, I'll pray. And so during that time, I'm moving, I'm doing something, I'm hydrating. I've got some sunlight in my face. And then when it's time to get back to the charts, I'm back in. And during that 5 minute break, it's amazing how you're gonna notice when you do this, you're gonna figure out what you need to do next. So let me know, guys, in the chat if you use the Pomodoro technique or something similar to that nature.
You know,
And
it's interesting that you bring that up because if you guys are from the States, right, you guys understand how long of a work week we sometimes work. Like the work week is getting longer and longer and longer, right? When I was at my job, the work week was crazy, and 4 hours of the day was probably spent talking about nothing. Like people were coming in my office just talking about nonsense, right? Like it's quality over quantity, right? And it's the same thing. If you have to be able to remain focused on a given task, and if you can do that efficiently, right? That's more important than just going in there and you know, wasting time. Like you have to, setting aside those work blocks are extremely important, and it's building that focus in your, it's a focus is like a muscle, right? Like a lot of people don't know how to focus for long periods of time, especially now with so much technology, right? It's so easy to get distracted. You can pick up your phone, you pick up your iPad, I was watching this really good stand up. This guy was saying like Americans are so well at like they're so good at like figuring out how to put as many screens as they can between their face and their eyes between their hand and their eyes as they got an iPad, they got an iPhone, they got the Google glasses on. It's like it's so easy to get distracted, so understanding how to stay focused even when you're studying ICT, right? Like don't watch it like Netflix. Like if you got an ICT video up on the side, don't be looking at YouTube videos on the left, right? Turn everything off. And the Pomodoro app is really great. Some of them actually, well, I think with the iPhone, you can actually allow it to restrict certain apps on your phone, right? All right, let's see if we can. Rod, you want to answer some Q&A with me?
sure. So I've added some questions as a pin message.
Hey,
You
all
want
right. So, if the PEH, I'm sure these might have popped up already, right? If the previous daily high would have been far away from the London high, how would you pick the SL? So the SL that I would pick, right? Like if the previous day's high, well, let's just as an example, right?
guys, what
So the
this is a
previous
good
day's
time
high is
to
all the way
smash
back
that
here,
like
right?
button, guys.
What was that,
Now,
Rod?
guys, those listening in, it's a good time to smash that like button, show your love and support, and don't forget to
Absolutely.
subscribe.
Huge shout out to my brother Rodrigo too. It's late over there across the pond.
It's all good,
So
man.
right, so the previous day's high is really far from the London high. All right, so I'm using some other swing or inefficiency or order block, something from the previous day as my stop loss, right? If it's really close to the previous day's high, then it's most likely not a high probability trade. All right. So your SL, it depends on how you're trading, right? If you're trading turtle soups, right? Like if I got in too early, if you're going to trade this turtle soup, and you're waiting for some type of break in market structure, which you probably didn't get because this was the news channel, right? Your stop has to go above some certain high, right? So for me, also in validation level is 50% of this 4 hour fair value gap. All right. So stops for me are not 100% concrete. Like I'm not using the same style of stop on every trade because I'm more like a universal trader. Sometimes I'm using the high of the fair value gap or lower fair value gap. Sometimes I'm using a previous swing low or swing high. It's all dependent on how the market structure is playing out, right? Based on the higher time frame. Like if it's a really high probability setup, a lot of times you can get away with using right something like a stop loss where you're just expecting that 4 hour fair value gap not to get filled. But if it's kind of choppy and bullish, like then your stop kind of has to go above a previous swing high. All right. This is a good one. What advice would you give to someone starting out in ICT and developing a model? It seems like there's so much material. All right. So I guess thinking about how to create a model, there's a lot that goes into a model. The model is like towards the end, right? Like if you're gonna kind of use the sport analogy, right? The model is basically you understand all the tools in your tool bag. right? As a golfer, you have to be able to putt, chip, drive, hit those mid distance shots, like pretty much everything. Um, every tool in that bag creates your model. So when you're just getting out in ICT, you have to focus on just a couple concepts, right? So the order block theory, liquidity pools, and inefficiencies. Like put your focus there and study those things for a very long time, because just studying those concepts is going to take you like 2 or 3 years. Trust me, it is. There's no way for me. Like you're trying to perform against top level traders, right? So when people say they can pick this up in 12 months, like, all right, well, try and go make it on the PGA Tour in 12 months. Like that, I challenge you to do that, right? If you're gonna just focus on one thing, it's gonna take you a while. So if you're just gonna focus on order blocks, just study order blocks, like back test them, understand every little nuance around them, and then you start adding other tools to your bag, right? So you can't skip ahead to creating a model if you're lacking a lot of different things, right? So my model is understanding almost every, I'm understanding almost everything. Like ICT concepts, our buddy Kit, he's getting into like vortex math and like you know time aspects and things like that. It's a little more advanced. You don't have to dive into that stuff right away, right? Like this is drinking from a fire hose, really. So when you're just learning an order block, right? Just learn the order block. And then you got to start incorporating other things like the weekly range, the daily range, the quarterly shifts, right? COT analysis. There's a lot you have to learn to try to put a full picture together, because if you only have just a couple things, and like this is how I was when I first started learning ICT, right? Like I've been trading for over a decade now. And the first 6 years, I kind of scratch off. I almost didn't know anything, right? And when you're just learning ICT, right, like you're trying to go in there and take trades, right? You may take an order block trade, but if you don't understand the fair value gap, right, maybe there's a fair value gap that's sitting below the order block, and now your trade's getting invalidated, and you're getting frustrated because you think it's the order block, right? There's a lot of different things that are going into creating a model, and it's not just a couple different tools, right? You can't be just like a one trick pony, really. All right, so that's my recommendation. Kind of go through the core content. I think the 2022 model. I haven't been through his whole series with the 2022 mentorship, but I've heard it's like very straightforward. So I would kind of start there and take it slow, right? All right, what else we got here? Rod, do you want to answer some of these technical questions, or you want me to keep going?
I'll answer this one. So I struggle with profit taking part. I try to take partials a lot and not letting it run to the final target. Right. So with partials, this is something that I would this is something that needs to be decided before you jump on live. Okay. And taking partials during your testing phase, this is a very important part of your risk management, and I would say this is part of your uh, offensive risk management. So you have your defensive part of risk management and you have your offensive part. You can't just be all defensive with your risk management, otherwise you're not gonna squeeze enough juice out of each trade. So when it comes to taking partials, the way I see it personally, especially in the beginning as a developing trader, I encourage for you to take partials. And this is something that you guys will see ICT himself do, right? He will take partials. And the reason for there's a couple of reasons why I would say taking partials is very, very important. Number one is this is a business, and every business requires cash flow. It requires cash in order to survive. Cash is the bloodline of the business, right? Sales is the bloodline of the business. Therefore, taking these partials is going to generate that um, the upswing in the equity that you need. Second, number two, the reason why you want to take partials is because it reaffirms the belief that you are a profitable trader. And I know they say don't check the P&L or anything like that, but you are going to check the P&L. And whenever you bank profit, you take that partial, You follow the rules. You knew you were going to take the partial there, and it hits. That means you follow the rules. That means you should reward yourself. You should give yourself a pat on the back. It is going to feel good. You're going to get that dopamine hit. But that dopamine hit, you're going to want more of it. But remember, it's not, don't associate the reward with the outcome. Associate the reward with the process that you followed. I'll repeat that. Write it down. Okay. Someone write it down for me on the chat, please. So associate the reward with the process that you followed, not the outcome of the trade. And this is the mistake many traders make. And this is, someone made a comment about how toxic social media is, because we glorify the result of the trade. We glorify the outcome. Whereas what you should be glorifying is the process. So I would say that taking those partials, especially in the beginning, it's important to, create cash flow in your business, increase your float, create a bigger buffer in your working capital. So as a funded trader, you want to increase that buffer so that you are further and further away from blowing up, and you're closer and closer to the target. And when it comes to payouts as a funded trader, take something out, right? When you see that money land in your bank account, it is motivating. It does give you confidence. And so in the beginning, you want to do that. Now, as you develop in scales, as you continue to grow your portfolio and your payouts get bigger and bigger, perhaps maybe you don't need to, if you make a couple of $100 here, a couple of thousand, you're not going to withdraw it, right? You're going to leave it there, and you're going to increase the buffer in your working capital. But obviously in the beginning, you want to be taking those small wins. You need to reward yourself, right? You need to, those partials are very important. Now, I'm not saying take small wins. I mean, those partials still need to be in line with an edge. So whatever that edge is, wherever the target, that initial target is, if it's a running liquidity, if it's taking out buy side liquidity, if it's hitting an opposing PDRA, whatever that target is initially, I would say take out 25 to 80% of the position. So that's my answer to that.
Yeah, so like not only that, like let's say you had a partial in mind, but the trade's just making you nervous, right? Just take you could take something off. Like even if you're not hitting your risk reward, if it's making you nervous, just take something off to reduce the risk. That way you can at least manage the trade properly, right? The way you would originally plan. If it's making you nervous and you don't think you can hold till your first partial, well then maybe you have too much size on, right? Like I'll do a video at some point because everybody keeps asking me how do I set up my trading view account. It's simple, guys. Like I just open up an OAN account, a demo account, right? I link that as the master account to my social trader tools, and all my prop accounts are linked to that. And when I'm trading on TradingView, I'm not looking at the P&L. I'm just looking at the pips. Like you can go in there, change the setting, right? Like let me just pull it up real quick just so I can show you guys. All right, go in here. Under executions, right? Like instead of it being money, change it to a percentage. Even if you change it to a percentage or pips, at least you're not sweating over it while you're in the trade. Okay? Like that to me was a major hack. I don't have to worry about, MT4. It's like flash. Like when you're on MT4 mobile, you're just like going over to the P&L screen. Like I want to see how much I'm up. It's like the worst thing you could possibly do because then you stop looking at the market. So that's kind of what I do, right? Like I just focus on the pips, and that relieves a lot of stress. If you're stressed out during the trade, that's something you probably have to work on, right? Maybe you're trading too much size. Maybe you're just not confident in your analysis, right? Confidence in your analysis comes with experience and understanding your model. All right. What else? What else do we have here?
So a quick reply to Vabs. He asked me, where is it? Something to do with the process. Okay.
Oh.
So when no wait, no, not that one. Sorry, wrong one. So Vab's reply was, when you say focus on process and not the outcome, process refers to tape reading. No, so just like Kurt, Kurt's answered this for me. Thanks, mate. Process is your system, right? This is the process is your routine. Your process is your pre-market uh, routine and system to firstly put yourself in the right state of mind. Trading when your setup is valid and probable, going through your checklist, that going through your trading plan, that is the process. When that is in place and you take a trade and it hits your targets, then don't reward the outcome, reward the process that it took to get to that point. That's what I mean by process. So
Yeah,
thanks,
and
thanks, Kurt.
I lean heavily on trade management process too, because my trade management is like I don't really have to think about it. Like if it's going 2R, I'm going to take partials and move my stops, right? Like that is me following the process. If it goes 2R, I don't take partials and it comes back on me and it stops me out at a full loss and I don't manage my stop loss, right? If I had a plan, if it's in my model to manage my stop loss at a specific point or take something off at a specific point and I'm not following that, I'm breaking my process.
You're welcome, Vabs.
Let's see. So, what are the consequences of blowing a funded account versus a personal account? What is more advantageous? Right. I talked about this a lot on Twitter, and I'm probably one of the most experienced prop traders right now, at least that I'm aware of, outside of like Paladin and Omar. So the consequences of blowing a funded account, you don't have your so as long as you secure a first payout, you don't owe anything to that firm, right? If you haven't secured that payout, then you're going to lose the initial cost for that challenge, right? So there's major advantages to trading prop over your personal capital, like tax advantages. Like you're just getting paid on you have to pay taxes on ordinary income, at least if you're in the States. I'm not sure. I can't speak to every other location around the world, but in the States, you're paying ordinary income tax. You're not paying short-term capital gains on. So there's major advantages in that. And not only that, so I'm just gonna bring up like a $200,000 funded account, right? Most of them are $1,000, $1,200, but you're getting a $20,000, typically $20,000 drawdown limit. So imagine trying to take that $1,000 and flipping it to $20,000, right? Now you might fail a couple challenges, right? You might spend $2,000 or $3,000. That's okay. You're still gonna get 17x on your capital to be able to trade with. Now, when you get funded, deleverage and treat your drawdown as your actual capital that you're trading, right? So there are pros and cons to both. If you have a really big personal account, you probably don't need to trade a prop account, right? Like if you have $1 million in funding from from some of these prop firms, you're really only trading like $100,000. So if you have $100,000 personal account, you have more flexibility. There's no rules. You're not gonna. I mean, the only rule is like don't lose your shirt. Uh, let's see, Kyle. How many years into mentorship did you find your model, and is the model that brought you breakthrough success the same model you use? So my model is really just the power of three Judas swing. It's really the month 8 core content, like the day trading essentials. And ICT did provide like a charter model for it, but it's really just based around understanding what my daily draw and liquidity is. Like I'm using 20, 40, 60 day look backs, um, and just trying to figure out what is the most likely direction of the market. If the market is unclear, I'm not trying to force something because it can go into prolonged periods of consolidation. So my model is really just trading around the midnight open, right? I'm using the standard deviations, the central bank dealers range and the Asian range. And right, like every or not every, right? 98% of bearish candles start bullish. So on a single day, your power of three. I think somebody had asked too. Does it work in the pound yen? It works in everything. It works on every single time frame, every single asset, every single candle that you look at forms the same way, right? Like every majorly, or most bullish candles start out bearish. So within that time window on a daily, intraday chart, that's what I'm looking for. If I'm bullish, I really want to see it trading below the midnight open when I'm trying to position myself in New York, right? Because I live in New York. If it's trading above the New York Open, like one or two standard deviations above the New York Open, it's not as high probability trade because the market's already expanded higher, right? Uh, Is this a question? The expectations of trading are absolutely rubbish. Social media has ruined trading. How do you shut out the noise and focus long term and not lose sight of long term expectations? So you know, I read a lot of trading books, or I've read a lot of trading books, right? And the markets were operating the same without social media, right? So a lot of what's being thrown around, it is rubbish. Like you need to have a mentor. Like back in the day when markets were just in person, right? There was live trading on the floor. You actually had to be on the floor to place a trade. You couldn't just click a button, right? Like even calling in, it would take like 3 days for your trade to process or make it through the channels that need to facilitate your trade. So the expectations that you can come in and just learn it right away is extremely unrealistic. Like I bought a book from Linda Rasch called Trading Sardines. Um, you can look it up. I think you can only buy it from her directly. But she said the first couple years she got into trading, right? She was like one of the first female traders on the floor, or one of the only female traders on the floor. She took a massive hit. Like I can't remember if she was trading options or futures, but she was extremely over leveraged and ended up owing the exchange like $50,000 to $100,000. So she had to stop working. She had to stop trading for like 5 or 10 years. Like she didn't trade at all. She had to work back her. She had to work off her debt. So that whole time, she's participating in the markets as an employee, but not trading. Right. The journey of trading is not just I'm going to get into it. I mean, because the barrier. So when I learned in business, right, the barrier to entry makes markets or makes a certain industry extremely difficult because it's so easy to get into. Right, like drop shipping or something is so easy to get into, but the competition is just cranked up because everybody can do it. Right, like everybody can open up a brokerage account and throw their money in and start trading, but it's not realistic. Like even a certain percent are not going to make it. That's just the way business works, right? If you're consistent though, and you have a goal in mind, and you can stick to your plan and your learning process and everything, I believe that anybody can make it. They just have to take a deeper look inside themselves and really understand what's holding them back. All right. You have any other questions in here? If not, I'm probably going to wrap it up soon.
Yeah, I've pinned some messages for you.
I think we covered most of these. I don't really understand this one, Vabs. Is Vabs still in the chat? How did you install Start Believing so as a newbie? Meditation and visualization. I actually didn't start meditating until like years into my trading journey. Like, because nobody really like pressed it that much. Back in like 2011 and stuff, Forex Factory, nobody was talking about meditation on Forex Factory. Trust me. You go on there, they're not talking about meditation. It's like buy my indicator. When it turns green, buy it. There's no mindset section over there. I don't think, but
Yeah, to add on to that, it's when it comes to how do you install or start believing as a newbie, the belief, the belief comes from repetitive practice. So you need to judge yourself by your habits, not the results that you currently have, not the not the prop firm capital that you don't have, not the lifestyle that you don't have. Don't measure yourself by the wealth that you currently don't have, or the right. Measure yourself by your daily habits. When you start to implement the daily habits and your values, you implement them every single day in everything that you do. That's when you begin to believe. So no matter what the result is, the fact that you embrace and you become that identity that you set out to have in the beginning, that that's when you find the belief. Okay, so you judge a man by his habits. Don't judge a man by the car he drives.
Some people do though.
Yeah.
Let's see.
Yeah.
How do you narrow down your higher time frame areas? Like if it's a wide FVG on the weekly and a little more narrow on the daily, what helps you determine the best area for that PD array or trade? So a lot of it, a lot of that's going to revolve around time of day, day of week, right? There's a huge weekly fair value gap that's trading into. I often don't like to see those huge levels, but when you start diving deeper into fair value gaps, right, there's quartiles inside of the fair value gap, right? So 50%, 25%, and 75% of that large fair value gap is, those are sensitive levels. Right? The fib tool is amazing because you can just, type in those numbers and measure it out and figure out, like, is it in a premium or a discount within this fair value gap, right? Already did that one. So this is, would you keep the live up or upload? I believe YouTube automatically records this, and I believe Twitter's already going to post it. So I don't think I have to do anything beyond that. I'll double check though. This is my first stream. We're new at this. I'm not sure if you picked chat, but what beliefs do you have about your stops getting hit, fear of missing out on profits, and taking partials?
I think I
So,
answered that.
oh, did we? Okay.
Yeah.
I think we answered most of these. Yeah, so if we don't have anything else, I'm probably going to wrap it up.
I think we got one more question to Kurt. So shout out to Kurt Hennig. He's one of my mentees. So yeah, shout out to Kurt. So what's I think that question's for you, Carl. What's next for you, funding wise?
Honestly, like, I'm almost like maxed out at the firms that I want to be maxed out with. There's so many firms popping up, right? I'm trying to be careful which ones I participate with because I've been burned before, right? The prop trading kind of came around and they poof in the dust. I'm working on building a longer track record and possibly managing outside capital, and me and Rodrigo have something in the works that we're working on. But outside of that, right now the prop firm capital that I'm managing, it's covering everything that I have as far as expenses and more. So I'm not really trying to press it like too hard,
Man, truly blessed. Truly
Yeah.
blessed.
Hasn't been easy though, I started small, like, and that's kind of what you can do with prop capital, right? You can start small and grow your way up, but each step that you take, right, you have to think about what you're going to do with your business, right? I tried to run a couple businesses when I was younger, unsuccessfully, because I wasn't reinvesting enough of the capital in the business to keep it going, right? So um, I spoke with a lot of very successful like independent contractors in the construction industry, and I learned a lot from them. Like, some of these guys were willing to just not eat like ramen noodles for 3 years without taking a paycheck, just so they can escape the rat race and build their dream. Right, and now they're doing, some of the they were doing like, just as an example, one of my hardwood flooring guys. his one contract was like $500,000. And he's not making that. That's his revenue, right? Like his cut of that is not that much, but he worked his way up. Like you start with from nothing, and you have to sacrifice. Like not willing, you have to be willing not to take a paycheck for the first 2 or 3 years. When I left my job, that's what I was willing to do. I was willing to not have to take, not get paid for a year straight. It didn't work out that way. I'm blessed with where I am right now, but I was willing to sacrifice that time just so I could get time back with my family, my wife, just being able to spend my time working out and do the things that I want to do and not have to go into the office at 6 a.m. and get out at 8 p.m. Right. So you have to understand where you are in life and like what you want to sacrifice to get, where you want to get to. Everybody's journey is different. Right. How did you manage to trade with a job? Did you transition from scalper to intraday or swing trader? So I started out as a swing trader. And it kind of just morphed into like intra week. But I probably wasn't as productive at work as I should have been. Right. I'm not so much a scalper because scalping, you're really active, right? Like whenever I scalp, I'm like highly focused, and like before you know it, your whole day is gone. Right. So like when you're trying to follow ICT and trade the 1 minute chart, like, yeah, it can be done, but it's high stress. It's like, it's not for everybody. I kind of like being patient and just taking 2 or 3 trades a week, right? Using the hourly 15 minute. I don't have to spend too much time managing. If I get pulled away from my computer, I don't have to worry about it. Running 10 pips and now I'm down 50% because that can happen in like 15 seconds. My guy Rodrigo, you can't have kids with the routine you mentioned earlier.
Well, I do have a 6-year-old, and I tell you what, the having my time boxed up, it's very important for me to give time to my family. Giving time to my family allows me to become and be a better trader, because if I can be disciplined enough to get what I need done at a certain time, and then when it's family time, dedicate my time with them, the time that they deserve, no devices, then I'm continuing that process of being disciplined. Of course, I don't use the Pomodoro with my family, but it's knowing that I completed what I needed to do on the day, and then switching off when it's time to switch off. And it is difficult. I'm not gonna sugarcoat it. It is difficult. One of the biggest challenges for me is transitioning between my trader thinking mode into family mode, into being a father, into being a husband, because I literally live 5 steps in that, just behind me, right? So within a space of a couple of seconds, I need to go from trader to father, trader to husband, and I struggle with that still. Uh, and my wife and I, we discussed this in different ways. So I think for me, what's worked in managing that transition is having a post trade process. So in my post trade, I need to be able to just empty my mind into my journal, go through some breathing techniques. And for me, usually the time that I'm finishing is around the London close. I pray, and that usually just takes me out of the zone of trading, and then I'm ready to spend time with my family. I'm ready to do whatever duties I need to go through. But look, it is a constant struggle it's a constant struggle. It's a constant daily practice. Now, what really helps is it's being mindful, practicing mindfulness in everything that you do. And the more you do it, the better that you get at being present, whether you are trading or whether you're with your family, or whether you have to go to work, or whether you're in the gym. It's very important you practice mindfulness and presence in everything, right? Don't go to the gym and then between every set, you're on social media. When you're in the gym, you should be focused on every single workout, focusing on your technique, focusing on your breathing between sets. That's really my 2 cents on that.
Yeah, don't overthink things. We're gonna talk about it on Saturday.
Yeah, yeah.
And yeah, it's extremely important to have a life outside the charts because these markets can drain. They can drain you, right? Back in the day, it was okay. You could just leave the trading floor and you wouldn't have to think about markets. But now you have access at the tip of your fingers to any type of market, right? Like a lot of markets are 24 hours a day. Um, you have to just structure yourself and program it in your day. Like this is the time I'm going to look at the market. Because if you don't do that, right now you're just sitting in front of the screen all day long. A lot of times you're not going to get anything done.
For real. Yeah.
Friend, will you take any course, any mentoring? So yeah, I've mentioned this a couple times. I am working on course content, and I'd love to provide it to you guys. Like I don't want to rush it because I'm trying to do something different, right? I'm trying to guide you guys from a business standpoint and getting you ready to trade the markets, right? Like
Hmm.
when I first learned, um, nobody was walking me through how I should be treating. Everybody says it: treat trading like a business, treat trading like a business. But unless you're in business, right, or have worked in business, it's so much harder to do. Because I was just a pizza delivery guy, right, before I went back to school. I didn't know anything, but going through all the steps and understanding, all right, what does it take to operate a business, and how do you set yourself up for success? Because if you don't plan everything out properly, it's going to be extremely hard for you. So I am working on a course. It will be out at some point. I'm not going to rush it though. So
Yeah. So
just like
whatever
and
you guys
subscribe,
want in
stay
the
tuned to
course,
the
let us
channel.
know in the
Like
chat.
we're gonna do a lot of free content coming forward. So even if you're not gonna join the course, like I think there's a lot of value in what me, Rodrigo, and our buddy Kit's gonna provide, as well as some other traders that I would love to bring on to the stream. I've built
Yeah.
a lot of great relationships with a lot of people. So
Yeah. So whatever you want um in in the program, in the educational program, just let us know right now in the chat. What is the one thing that you want us to cover in an educational program for you? Let us know. And whilst you do that, don't forget to smash that like button because yeah, this live stream's been fun. I think we should do it more often, mate.
yeah, man, we will. Yeah, I'm gonna cover more markets. Like it'll be more chart analysis. These last couple weeks, I actually haven't been trading a whole lot. Like I haven't looked at the market, just because I kind of hit my profit targets that I wanted to hit, and towards the end of Q1, I'm trying to focus on like wrapping up my taxes and just resetting. Like I'm in a position where I don't have to trade every single day, and it's really nice.
Amazing.
But the analysis will come. I'm gonna start diving into crypto markets. My buddy Trader Main is like, "You got to start trading Bitcoin again." I'm like, we'll get there though. Let's see. There's some great questions in here. What would you advise someone who's looking for a model? Finding most of the time my bias is right, but I'm not getting a model to execute on. Mostly, especially during New York time. Um, I think there's so many models out there. If you can't spot a model, then maybe you just don't understand the model 100%. So that's my advice would just be kind of keep studying because there are models there, and they do appear, and they always appear like around New York and around London. It's a repeating process. It is. It just takes a long time to study it over and over and over again. So your model AMD, do you trade on London Kill Zone or find New York Kill Zone? Honestly, like I trade universally. I'm at the point where I can almost trade, any kill zone. So the AMD appears on every time frame. Like I just showed you the monthly AMD on the dollar index, so you can't really put that into a kill zone, right? It's a quarterly basis. So The AMDs will appear on the 1 minute. It's just about you going into the charts and finding them. Right? Like I say this all the time to my friends that I try to get trading. If you were to take away the symbol and the time frame, you would have no idea what time frame and what asset you're trading. They're all the same. Right? The time frame just it requires you to make decisions a little bit faster or a little bit slower. Right? And the setups appear less frequently or more frequently. Do you recommend to operate and learn all the methods that if you're just beginning, no. Like um, focus on the basic concepts, order blocks, fair value gaps, and liquidity pools, and then try and find a model. Because he's got so many models. I think he even mentioned he's got like 60 PD arrays that haven't been released to the public. Like you're gonna drown yourself in trying to study some of this stuff. So my trading is very simple. I don't really have to tweak it a whole lot. Like it's more just about optimizing my trade management, my stop loss management, my profit targets, which they're probably never going to be perfect. Like I'm never going to hit the point where I'm like I've made it. All right, and that kind of what makes like Hall of Famers like Michael Jordan and stuff. It makes them great because they were never satisfied with where they were. Right, they always thought they could be better, and that's like trading. Like when you're never going to hit a peak and just be like, all right, I'm done. The best traders are going to just continually learn nonstop. Dixie just hit sell side. All right, man. I think I'm going to have to hop off. Like, we'll probably be on here all night talking about stuff.
Yeah, no, it's been a great session, and definitely up for doing more. This Saturday, guys, we're going to be jumping on the Trader Roundup podcast, Saturday, 9 a.m. Eastern, I believe.
Yes, correct.
Yeah, so that's should be around 1 o'clock UK time. So, guys, we're going to be reviewing a book, and the content that we're going to go through. You know, if you're struggling with your psychology, if you're struggling with decision making, indecision, then definitely turn up. And if you've enjoyed this live stream, make sure that you smash that like button right now. Subscribe to Jade Cap. You know, he's hosting this space for you guys, supporting the community, and you know, shout out to the Trader Roundup, shout out to ICT Concepts, shout out to ICT, the mentor of mentors himself, the ghost in the machine, and yeah, guys,
Shout out to
we
you
love
guys,
it,
the community.
appreciate it.
All right, guys. Take it easy.
Peace.